Okay, let's try this again. Tony LaPorta here with NakedTrader.com. It's 9 o'clock Chicago time. Wall Street's been open for a half an hour. Markets have firmed up a little bit. I still don't like it. But this is, I will try to give you what I tried to give an hour ago, but I'm struggling on the technical side of things with computers and the like. I put out a chart to my readers, and I sent it to Jill. Jill is the administrator with NakedTrader.com, and she will put it on the website shortly. And it's a gold chart, and this gold chart has a possible head and shoulders top formation in place. And you know, people have been talking about this head and shoulders top for a while. I didn't like it because there was two left shoulders but only one right shoulder, and I didn't like the how steep the neckline was. Well, guess what? We built another right shoulder, and now I all of a sudden do like the look of this head and shoulders top. The neckline comes in today at like 1355, 1356, depending on where you put your depending upon the thickness of your lines. So keep an eye on that chart today. I see gold's trading like 1366, so we're still $10 away, $11 away from the breakout area. If it breaks this trend line significantly, the objective is like 1260, and I'm even thinking along greater terms. This, you know, from a technical point of view, when you have a trade on like this at the 1260 level, you only take off for head and shoulder top formations. You only take off a quarter of your trade, and you move your trailing stop down, and then you look for a continuation formation, i.e. for the market to continue lower. This is the 1260 is just an initial objective. What I know from all the weekend work that I do is every weekend I put out a monthly gold chart, and you know, if you look back down in the bottom left hand corner, there's a triangle there, and that we broke out of that triangle in 2002 and had a quick run up, and on the correction I put out to my readers, and I had just started PowerPoints at that time, and I put out to my readers that you had to buy gold at the 307 level. Well, they all thought I was nuts, and I am nuts, but since then I keep on putting out a monthly chart and showing the climb, and there's been a trend line that we've hit on a couple, 3, 4 different times, and we've spiked away from that trend line, and we probably haven't touched on it for 2 or 3 years. I'm thinking with this head and shoulders top in place, if this formation is for real, we may come back down in the next couple of months and retest that neckline. And I'm thinking that neckline comes in around 1,000, maybe 1,100. If you go on the Naked Trader site and sign up for a free week, you can have a look at that chart over the weekend. And but if we break this neckline and we break it convincingly, I think we could be in for a multi-month correction in the gold market. And you know, I mean, they've all got it. So you know, and it wouldn't make any bit of sense with all the inflation out there. So they've all got it. Who knows? But the only thing I know is markets go down a lot faster than when they go up. So on to the markets, and on to another part of my business. I trade a small fund using a trading system that I developed, and my fund yesterday gave me a buy signal in the bond note spread. Now you all know a couple days ago I put out a TLP gut trade, and that was, I looked at the bonds and the notes, and they refused to come off, and they should have come off, and I said, you know, close your eyes and buy the stuff. And yesterday you took a little bit of heat on that trade, and then it all came right in the afternoon, and has followed through again this morning. Watch this 122.0607 area in the bonds. We get through there, then the boys have to cover their stops. But so anyhow, so I received this buy signal in the bond note spread. I was long them both yesterday, and I actually bought a few more bonds, sold my notes. Well, actually went short the notes, and so now I have the spread on. And the way it looks to me is the bonds are up 11, 12 ticks, 13. Bonds are up 13 ticks, and the notes are up 8 ticks. So I'm picking up 5 ticks on that spread. Thank you very much. Better. I felt comfortable with it. I was able to go to sleep with it. Not a problem. So going into this weekend, we obviously have a day off on Monday, so I am keeping a very close eye on things. I still don't trust this bounce in the indices, and I do think you will see profit taking going into this afternoon, with Monday being Martin Luther King Day. So that's about all I have. Go on to the Naked Trader site and sign up for a free week. I put out a very extensive weekend commentary with anywhere from 10 to 15 charts, and I think you'll like my work. So that's about all I have. This is Tony LaPorta with NakedTrader.com signing off. Have a great holiday weekend. Cheers.